Hey, how we doing, everybody? Hope your weekend's going great. Even though the stock market's closed, I'm looking at some articles together I wanted to cover. We're going to look at some good news together, some bad news. We're going to look at Donald Trump's wild posts because this man is back at it again. He just doesn't stop. We'll look at whether or not the United States is going into a recession or not. And then closer to the end, we'll talk about what we can do to prepare either way, whether we go into a recession or not. Hope you enjoyed this video. You're always welcome back because staying updated is the way to do it, and hope you enjoy. Let's get into it. So first, stocks have been performing really well if you've been watching. This is really off of that US and China trade talks that we've been getting. This has caused the trade and AI stocks to do well. We've had the Dow Jones Industrial Average up 3.4%, S&P 500 up 5.3%, NASDAQ up 7.2%. So there's a lot of optimism in the market despite all of the bad news and warnings that we've been getting. We've had Powell's warning of volatile inflation going forward when he had his speech the other day, worsening earnings growth from many companies during their earnings calls. We had Walmart warn that they're going to be raising prices on their goods going into this month and next in summer. Moody's downgraded the U.S. credit, tumbling consumer sentiment, a flat real estate market despite this being the time that it usually starts heating up. So a lot of bad news, but despite all of that, stocks have been doing pretty well. The AI trade actually came back because of Trump visiting Saudi Arabia, which shows growing demand for sovereign AI with foreign nations wanting US chips. And this is really good for companies like Nvidia, AMD, Intel. On Friday, Trump said that the United Arab Emirates would be the latest buyer of American AI tech, and that really caused AI stocks to really start going up, with Nvidia double digits. The VIX is actually pretty low right now, and what the VIX measures is the expectation of future volatility based on the S&P 500 index options, and it is often referred to as the fear index because it tends to rise during periods of market uncertainty. And with more news and trade talks and really like Trump, this man is a wild card, and when people feel like things are going better, that causes this volatility index to really go down. And I seen this quote, I thought it was interesting. A quiet, calm market is a bullish market, despite all of this going on. Everybody likes calm and forecastable events. So all that's interesting. Now, back to trade talks. So we've had, the United States and China talking trade, and the 90-day reduction agreement was a breather for the markets. But we're not completely out of the water yet. Tariffs are higher than most expected, and before Trump, they're much higher than they were before Trump. It can take a lot longer than expected to actually reach any agreements to see further relief taking as long as even much of this year. Geopolitical strategists are prepping clients for a messy couple of months, they say, warning that these negotiations can de-escalate and re-escalate, causing tons of market volatility. And we just talked about what volatility, a good measure of that would be, which would be the VIX. So if we start seeing the VIX come from these low levels of like 20 and 30 where it's been living right now, if it started going back up to like 40, 50, 60, 70, that's higher volatility in the markets. And that's when markets start going up and down more, usually down. There's also even skeptics that believe that a larger deal, a bigger deal, can take years to get to. And you know how impatient people in the market are. They want to get rich tomorrow. So that could be seen as bad news. Now, let's talk about what Trump said on TruthSocial. There were a few different ones, but this first one was targeted at Walmart, speaking about tariffs. So Trump said, Walmart should stop trying to blame tariffs as the reason of raising prices throughout the chain. Walmart made billions of dollars last year, far more than expected. Between Walmart and China, they should, as is said, eat the tariffs and not charge valued customers anything. I'll be watching, and so will your customers. So he really took a stab at Walmart for warning of lifting prices, and really says that Walmart should eat these costs. Why should consumers? But this could just be seen as a scapegoat for rising prices, so people aren't blaming Trump. Then he also made another stab on his Truth Social. So if you really want the drama, if you want to get messy, just go on Truth Social and subscribe to Trump. The consensus of almost everybody is that the Fed should cut rates sooner rather than later. Too late Powell, a legendary man for being too late, will probably blow it again, but who knows? So he's really pressuring the Fed to cut rates, and we talked about it in an earlier video when you're a kid and you're asking your parent, can I get some ice cream? Can I get some ice cream? Can I get some ice cream? Eventually you're going to get aggravated and like, no, we're not getting ice cream. So that's pretty much where Jerome Powell is. But remember, this could be just a scapegoat for Trump in case we go into a recession, and also a way to be seen to avoid a recession. Now, speaking of recession, we got some keywords that I searched, and recession was one of them, probably the only one we'll go over in this video. But what we see is that recently the search term for recession on Google keyword search was the highest it's been in nearly 3 years. And this is huge because once people start searching recession, that means it's top of mind. Maybe it's in the news and people are wondering about it. Are we going into recession? And the definition of recession is, there's different definitions, but one of the most common ones are 2 negative consecutive quarters of GDP. So GDP negative 2 times in a row for 2 quarters. Now, since the tariff rollback, many thinks the risk of recession looks a lot lower than it did a month ago, but it's not 0%. And we can see that these keywords, this search for the term recession has gone down considerably back to lower levels. Now, with many thinking that recession could be off of the table, but not completely zero, there's a few reasons for that. Those trade wars haven't gone away. Trump can change his mind, or the US can fail to strike a deal with other countries, and that would be seen as bad. And many economists expect the US to grow to taper off, that US growth to taper off sharply this year despite lower odds of recession. First quarter GDP was the first quarterly decline in growth since 2022. And we just talked about the definition of a recession, 2 consecutive quarters. So if next quarter we got negative GDP, by definition, that's technically a recession. But a lot of people were front running tariffs, so who knows if that actually happens. If anything, we could see positive GDP next quarter, but you know, anything could happen. A survey by the Federal Reserve Bank of Philadelphia sees U.S. growth decelerating to the slowest in 16 years if the pandemic isn't included, that era. Forecasters see GDP, which is the official scorecard of the U.S., expanding at 1.4%, down from the expectations of 2.4% before the trade war started. Also, the CEO of JP Morgan Chase, Jamie Dimon, said on Thursday that he wouldn't take the risk of recession off the table at this point. So, imagine what kind of data that man has access to and the type of people that man knows. CEO of Chase Bank? I don't know. But what can we do to prepare if there is a recession? If not, we're just in a better scenario regardless. But what can we do? There are a few different things we can do. One, starting with building an emergency fund. So you really want to start stacking cash just in case you lost your job or there's opportunities in the market. You want to be able to jump on that and honestly feel safe about your financial well-being. So building up 3 to 6 months of expenses is a good way to start. Another way is by cutting expenses. So honestly, I got a more strict approach to it. Just cut off everything, and then if you need something, it's kind of like that minimalist approach where you box up all your clothes and just put it in the garage, and if you need it, like if you're thinking of it and you actually need it, then pull it out at that point, and everything else you don't need it, just get rid of it. So cut your expenses and necessarily those unnecessarily ones, necessarily. Be sure to get out of debt, but you want to build that emergency fund first. And once you start focusing on getting out of debt, a great way to do this would be by focusing on your larger interest rate debts first. That way, you're paying less interest over time. Also, another great way is to learn useful skills that are in demand. So this could involve getting certificates, getting licensed in something, getting a degree, but be careful about stacking on debt, right? Because usually degrees cost a lot to get. Also, AI is a good one to learn how to use to your benefit, because there's so many things we could do and learn and ask and have explained to us and accomplished through AI. So those are a few things that I documented that could really help us out if we went into a recession. But even if we didn't go into a recession, all of these things could prove useful to our benefit. So that's what I got today. 10-minute video, pretty short, simple, sweet, and short. Hope your weekend's great. Hope you got a lot of value out of this video, and be back for the next one. Y'all have a good one.